Welcome to this week's look at the state of the New York City real estate market. This is for the week of March 31st to April 6th. Last week was quite a week, and we're going to take a look to see what happened last week in the luxury market, the Manhattan market and the Brooklyn market. And of course, we're going to continue to keep an eye on the market because there are a lot of new factors, macroeconomic factors, let's call them that remain to be seen as far as their impact on the market here in New York City in terms of real estate. We'll get started now with the luxury market, which actually was down in terms of number of signed contracts, down 18 contracts from the previous week. There were 27 contracts signed in the luxury market for properties priced at $4 million and above. Let's talk about the number one and the number two contracts in the luxury market. The number one contract was apartment 2ADE at 1010 Fifth Avenue. It was asking just under $17 million. It was listed in September. It has over 6,000 square feet. It is a co-op. It has 6 bedrooms, 5 bathrooms, and 2 powder rooms. And most of the rooms face south over 82nd Street. There are 3 bedrooms that face over 5th Avenue. The apartment, while not new, is in excellent condition and was sold with 2 storage units. Amenities in this building include doorman, resident manager, storage, and a fitness center. This co-op board allows 40% mortgage financing. The number 2 contract was a sponsor unit, penthouse 38W at 180 East 88th Street. It was asking $12,650,000, reduced from $15 million when it was listed in January of 2016. This is a duplex. As I said, it was a sponsor unit, so it is a condo. It has just under 3,800 square feet, includes 4 bedrooms, 4.5 bathrooms, and a study. The downstairs has a 44-foot great room with 28-foot ceilings, an eating kitchen, study, and a primary suite. Upstairs, 3 more bedrooms, and this unit has 9-foot windows and has expansive views of Central Park and the city. Amenities in this 47-unit building include doorman, fitness center, basketball court, playroom, game room, residence lounge with catering kitchen, and storage. The total weekly asking price sales volume for last week was $188,435,000. The median asking price $6,979,074. Median asking price $5,965,000. Average discount from original ask to last asking price 8%. And average days on the market, 997. That's it for the luxury report. Any questions, post them below. Reach out to me also at Sotheby's if you prefer to do that. We're going to move on now and take a look at what went on in Manhattan and Brooklyn last week. At the end, I'm going to share some additional information with you, as well as strategies for success. If you're an active buyer or seller, definitely going to want to stick around for that. So in Manhattan, the supply was up for the week. 545 properties came on the market. That's a change of almost 29%. Contract signed 291. That's up a little over 9%. Off-market properties also up, wow, whopping almost 126% at 210 properties. The supply for the month, 2,127. That is up 34%. Contracts signed up 25% for the month, 1,141, while the off-market properties also rose 492, up 43%. In this latest reading of the Market Pulse, we do continue to see ourselves in a neutral market, not really much of a change over the last week or the last month. The Liquidity Pace chart that shows the 30-day moving window of contracts signed, 1,141. That is up for the month, a little over 19%, and it's up almost 9% from last year. That's it for Manhattan. I am going to give you some additional information at the end of this report about Manhattan and about Brooklyn and about the market in general. So any questions on this section, please post them below. Reach out to me at Sotheby's. We're going to move on now and take a look at Brooklyn. The supply in Brooklyn was up 280 properties. That's almost 14% more than the previous week. Contracts signed also up. A little bit lesser activity with contract activity for the week, 140. Contracts signed, that's up about 4.5%. Off-market properties rose, just as it did in Manhattan, quite dramatically, 102% at 95 properties. The supply for the month in Brooklyn, 1,054. That's up a little over 27%. Contracts signed, 579. That is up 6%. And the off-market properties for the month rose 243, almost 21%. The latest reading on the Brooklyn Market Pulse shows that we are down a little over 1% from last month, down 2% from last year, kind of dropping. We still are in somewhat of a neutral market, but it is dropping a bit, at least for the moment. The liquidity pace chart for Brooklyn, 579 properties were signed into contract over the last month. That is up a little over 2%. That is up 2.5% from last month and down 5.5% from last year. Those are the reports for last week for the luxury market, Manhattan market, and the Brooklyn market. So I'm going to sum this up. I'm going to share some additional information. I'm also going to give you some insights to help you be as successful as possible if you are an active buyer or seller in this market. So as I said, in the luxury market, we were down 18 contracts from the previous week. However, there were still 27 contracts signed for properties priced at $4 million and above. 3 of those were in the trophy category, priced at $10 million and above. Condos, as usual, outsold co-ops 15 to 9, and there were 3 townhouses in there as well. 15 of those properties were uptown and 12 were downtown. So basically an even split on that. The conditions in Manhattan and Brooklyn remain fairly neutral. However, they're a little bit different. The supply in Manhattan is on trend, and contract activity notably was up for the week. In Brooklyn, the supply is on the rise. However, the contract activity remained fairly neutral. Total supply for Manhattan, 6,691. In Brooklyn, 3,295. Pending sales in Manhattan, 3,191. In Brooklyn, 1,906. Off-market properties, 3,641. Brooklyn, 1,802. Average days on market in Manhattan, 94. In Brooklyn, 64. The liquidity pace, this is this 30-day moving window. Contract signed in Manhattan, 1,141. Brooklyn, 579. So what does all of this mean? As I said, wow. And I don't even think I have to say it. I mean, last week was quite a week. And Manhattan real estate had a good showing last week with new listings and overall supply trending seasonally. The deal volume was up with 281 contracts signed last week. And the 30-day pace of contracts signed hits its highest mark since 2022. Now, regarding the impact of macroeconomic factors, one thought about this, because we don't exactly know where this will lead, but one thing is historically true anyway. With the economic turbulence, buyers may well look to put their money in something less volatile than the stock market. For example, New York City real estate, as historically New York City brick and mortar has long been considered a sound investment. Also, with the 10-year yield now below 4%, mortgage rates may continue to decline a bit, and that could potentially bring more buyers and sellers into the market. In Brooklyn, it was a bit of a mixed performance last week. The new listings and the overall supply are rising, even outpacing levels seen in recent seasons. However, the contract signing volume and overall demand have yet to really gain any significant momentum. I just want to share the mortgage rate chart with you that I had mentioned earlier that we may start to see rates come down. Last week, they did come down a bit, as you can see from this chart. So I'm going to share this chart with you about contracts that are signed, let's call it by pricing sector or tier. So the luxury market we know has just been going gangbusters. The resurgence of this seeming resurgence of the under $4 million property is worth talking about now, because we can see from this chart that the combined height of the green and the blue bars is higher than it's been since early 2023, and it seems to be back on par with its 2016-2017 timeframe. Manhattan rentals are at an all-time high. Rates, as I mentioned, seem to be ticking down a little bit. This under $2 million segment could also be ready to start to gain some momentum and strength. Taking the same kind of look at Brooklyn, we see that the under 1 million and 1 to 2 million segments show lateral movement. There is a notable trend emerging in the 2 to 4 million and 4+ million markets. 10 years ago, we just didn't have a lot of properties like this in Brooklyn, but today they really represent an expanding portion of Brooklyn's market share. These higher price segments may well begin to influence Brooklyn's market going forward into the future. I just thought that might be something of interest, because that is one change that we're seeing in Brooklyn that really hadn't been there. As I said, 10 years ago, those things barely existed, those higher priced properties. So now we're seeing a lot more of that. What does this all mean? If you are a seller or a buyer in this market, well, sellers, strategy here is to really understand market conditions. If you understand market conditions, it will help you tremendously to be successful. This current market is effectively neutral. And that means there is only one way to price, and that is in alignment with the market. Be very strategic about your asking price. Remember that the asking price is not the same thing as the selling price. And if you are strategic about your asking price, it will help you to get your deal done within the first, let's say, 30, even 60 days. Time is not your friend. The longer you are on the market, the less money you will make. And you should be aware that, especially this time of year, you have new competition coming on the market every day. Don't be too aspirational in your pricing. Be sure that you are pricing in alignment with the market. Try to position yourself as being best in class all the way around, not only from a presentation standpoint in terms of condition and as best as you can control all the other elements of, let's call it, curb appeal. Also be aware that the asking price is an essential part to your strategy of success. So be sure you stay in alignment on that. And if you find after you've been on the market a few weeks, you are not getting traffic or offers, then you need to adjust your price. Certainly do it by the end of April, because by the end of April, we then have basically May and a few weeks in June. You don't have a lot of time. Buyers, good news for you. You do have more choices, and the mortgage rates have come down a bit, as I said. Take advantage of both. And when it comes to leverage, look to days on market for guidance. As I said, with the 10-year yield below 4%, mortgage rates may continue to decline, and that could bring more buyers and sellers into the market. You may find you have a little more competition if that happens, but for right now, there are some solid deals to be had in the New York City market, so go get them. Okay. That is it for this week's look at the state of the New York City real estate market. Any questions at all, please post them below or reach out to me directly as Sotheby's. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.